Hi, and welcome to our last edition of For Your Interest for 2014. This quarter has been an incredibly volatile and unprecedented one for fixed income investors. Despite the fact that there have been some positive developments for fixed income asset classes and some decent return numbers, this quarter will always be remembered for the demise of African Bank and the ripple effect that that sent through local credit markets and local interest rate markets. A lot has been written and commented on, read the African Bank saga, and it's not our intention to rehash that here, but we decided to have one parting shot on ABLE as our feature article this quarter. And we look at ABLE in a money market fund context. While we realize investors might be a little bit shell-shocked about the impact that ABLE exposure has had on the portfolio, we look at the positive nature of a money market fund and the benefits of being in a diversified money market portfolio, and conclude that despite the shock value of the ABLE default, that these investment vehicles still make a lot of sense and will provide a lot of value to investors going forward in managing their short-term, low-risk fixed income money. In addition to ABLE, there was a lot going on in fixed income markets, and we find foreign investors' presence in markets still a meaningful driver of returns in this asset class. In our second article, we look at foreign investors' presence in our market, how much of our market they comprise, and how their movements, both in and out of our capital markets, impact returns of fixed income assets. There are some blessings to having them as a part of our market. There are some negatives that others may bemoan, but the reality is they're here to stay. Global capital markets are free, capital is able to move in and out at will, and we rather need to embrace foreign investors and try to understand what drives their investment decisions rather than bemoaning the fact that they're a part of our market. We've spent a great deal of time analyzing foreign investors into our investment process so we can understand the impact of them being here. And lastly, we've had a change of governor at the South African Reserve Bank over the quarter. It's important to understand who's at the helm of the Reserve Bank when analyzing the impact on monetary policy going forward, which in turn drives performance of fixed income asset classes. So Governor Lesetja has taken over. He's a well-known entity to fixed income investors, and we don't expect too much uncertainty or too much change to monetary policy going forward. In our last article, we have a look at Lesetja's background and have a look at what monetary policy might involve with him at the helm going forward. So we look forward to the last quarter of the year. It's been a blistering year with a lot of unprecedented happenings in fixed income markets, and we go into 2015 quietly optimistic about the prospects for fixed income markets with you, our clients who have supported us so well. Thanks again, and have a good last quarter.